Most people came into trading because they want to work for themselves. They want to have their own time to themselves. They want to have that freedom of time to go and travel and do the things that they love. So really sit back and think about that strategy you're using right now. Will it even allow you to do so? All right, ladies and gentlemen, welcome back to the Simple Markets channel. This is Coach JB here, and today we are making a video on swing trading and the advantages as well as the common misconceptions that many people have about swing trading. We are going to be going over 5 different tips today, and in my opinion, the last one is probably the most important on the list, so stick around for that one. Now, all I ask of you is to come into this video with an open mind and understand that Simple Markets has the highest funded member ratio out of any community on YouTube. And I firmly believe that a big part of that is because we teach the traders a swing trading strategy, which will not only be far simpler and less complex, but it will finally allow you to make the profit that you want in trading heading into 2026. And if it interests you, download the strategy in the description below and make that change for yourself. But we are going to start here with number 1, which I think is probably the most important and most common misconception. And that is the idea that if you trade the 4-hour time frame, it requires more time on the charts. This is actually not true, and I will show you why, and we're going to start here with an example of what most of you might do when you go and trade your normal session. So in the foreign exchange market, if many of you don't know, there is sessions. There's the New York session, the London session, and the Asia trading session. This just represents when those institutions and those central banks are open in those different regions of the world. So typically, if you go into YouTube and you type in how to trade Euro USD, how to trade Forex, smart money trading strategies, you are going to find people who hop on the 4-hour time frame. They form their bias. Let's just say Euro USD, we expect it to be bearish today. Then they have to hop down to that 15-minute time frame. They're going to look for some form of point of interest here. Maybe they see this break a structure to the downside and they're going to mark a point of interest. And then what they have to do is wait till the 8 a.m. session open, which is right about here. And then the New York session actually ends around noon. So this entire window of time, many people are sitting on the charts waiting for their setups. So here's a good example of that. I might be looking at this simple zone here that I have marked out. This could be considered a supply zone for many people. And then as we tapped into that, I may now drop down to that 1-minute time frame and then look for some sort of confirmation that tells me I should be going short in this position. The issue here is now I have to sit and wait for this order to get tagged into. It could be 5 minutes, it could be 20 minutes. When that order eventually gets tagged into, I could take a loss, and then I have to be ready to look for another setup that could be presenting itself. Or on the contrary, it taps me in and we start consolidating or take some time to eventually start going towards profit. And then once again, we still could run a loss and then form a break of structure to the upside, and that does tend to shift some people's bias, and they might go and try to enter the buy position that will be following. All of this trading and activity is happening within that New York session. Some of you may trade the London session similar as well, but this 4-hour window of time, you have to be focused and on the charts and active. It is scientifically proven that humans cannot focus on one thing for 4 hours at their maximum capacity. So you are already psychologically at a massive disadvantage here. Now we're going to go ahead and compare that to what I do as a swing trader. As a swing trader, I have a very large watch list because it allows me to get more trades. We'll touch on that later in the video, but I simply hop on the 4-hour time frame here. I look at a pair and essentially think of it as a picture, because all I really do is see if my entry model is met. If it is, I throw my fib on there and I set my order, and I could just brush through all of my pairs and do that very quickly. For example, I will show you in real speed how I would brush through this watch list. I'd start with AUD/JPY. I can very quickly see there is not an order that follows my rules. Once again, CAD/CHF, I'm looking at the most recent price. There isn't a break of structure, so on to the next. Same exact thing, no break of structure, on to the next. Same thing here, we didn't get a candle close above the high, doesn't follow my rules, on to the next. That is truly how quick I go in a live market on the 4-hour time frame looking at my orders. And to get through a watch list of this, it typically takes about 5 minutes a day for me. You can maintain this strategy and profitability in less than 10 minutes per day. And that topic kind of bridges us into number 2, which I would call your lifestyle. Every single person here has a different lifestyle that is watching this video. Some of us are heading to school after they watch this. Some of us are probably in school watching this. Hopefully you guys are still paying attention. All of these can be maintained with that 5 to 10 minute per day window that I talked about. But more importantly, it can be at any time of day. Every single person watching this video has a 10-minute window that they can dedicate to trading. And it's very easy, like we talked about earlier, to focus for 10 minutes a day compared to 4 hours. I don't know about you, but for me, I don't have 4 hours a day to dedicate towards trading anymore like I used to. I would sit there and force a trading session strategy to work. I would hop on every day at New York Open at 8 a.m. I would sit for 3 hours sometimes, even the full 4 hours if setups were presenting themselves. And I always thought in the back of my mind, man, when I head to college next semester, I will never be able to maintain this. I can only do this strategy in the summer. The best part of swing trading is being able to fit it into any and every lifestyle. I don't care if you work 18 hours a day, you have a 10-minute window to go and browse the charts like I just said and set your orders. It truly takes no more than that, and you can have profitability running in the background of your lifestyle as your day goes on. I'm sure everybody here could benefit from spending more time with your loved ones, so imagine if you could make money in less than 10 minutes of active focus per day. If many of you think about your actual why in trading and why you started doing this, it's more likely the freedom than it actually is the money. I don't know any person that came into trading and said, I want $1 million, but I want to trade all day, every day, and have no ability to go and travel or use that money to my advantage. Most people came into trading because they want to work for themselves. They want to have their own time to themselves. They want to have that freedom of time to go and travel and do the things that they love. So really sit back and think about that strategy you're using right now. Will it even allow you to do so? 2 to 3 hours required every morning at a set time of start session is no different than you going into work at a set time of day for a set amount of hours. Now, number 3 that we're going to go over here, this is going to be spread and slippage. For some of you that don't know, every single Forex pair has what's called spread, and that is the difference between the sell and the buy price, or aka the bid and ask price. Currently on AUD-CAD, it is 1.1, which means that 1.1 pips of spread is the difference between those variables. When I go ahead and set a trade on the 4-hour time frame, I may be looking at, for example, a 27.8 pip stop loss in this scenario, where 1.1 pips really does not have a large effect on that, compared to if I were to delete this and drop down to that 1-minute time frame we talked about. Let's just say I look for my most recent break of structure, and let's just say I was taking this buy position here at this demand zone, but 3.5 pips is my stop loss, and let's just say I'm targeting some sort of daily high or something. Now that 1.0 or 1.1 pips is much more detrimental to my trade, and statistically speaking, it makes these trades significantly less likely to play out as you go on lower and lower time frames. If spread and slippage didn't exist, everybody would just trade the 1-second time frame all day, but that is unfortunately not the case here. When you're on that 1-minute time frame, that 1.1 pips is going to significantly skew your actual data of your trading strategy. You will hop on a live broker and start realizing that most of your trades lose because of these variables because you are in such a low time frame. Now, more importantly, there's another concept called slippage. Slippage is the idea that very quickly sometimes the foreign exchange markets move with a lot of speed. Typically news events or large media events will come out and affect price action in this way. We could see this was a recent news event. Now let's imagine you are short on AUD-CAD here, and let's just say your stop loss and entry were here. Stop loss above the high, take profit at the low, and you were just trying to take a short position to keep this trend going. You got entered into price action here, and then this type of candle forms, which is an absurd candle, but it does happen. You had a 2.1 pip stop loss. If you risked 1% on this trade, on your actual firm or broker, they don't have enough time to register these candles and close out your trades in time, and this is what creates slippage. So if a 1% risk was put on this 2.1 pip stop loss, by the time this candle is registered, which is typically when it closes, you can see you would have technically a 19.1 pip slippage, which 19.1 divided by 2 is roughly 10% that you will lose on this account. If you were in that exact trade scenario I just showed, you would blow your entire prop firm evaluation in this one trade scenario because of the risk of slippage on these lower time frames. Now, number 4 we are going to go over here is actually your number of total trades. A lot of traders believe that if you are a swing trader, you are going to get significantly less trades because you're on a higher time frame, and they love that action. They love being involved in the markets. But I'm here to now prove that wrong once again. I myself am one of the more conservative traders within my community. As you guys know, I talk about it a lot, but I go away on a lot of trips. I love to travel. I'm very passive with my trading. And even then, in 2025, I net myself about 165 total trades. But if we go ahead and look at some of our backtesting data from different students, you could see about 556 trades in just 1 year. That is essentially 2 trades for every trading day of the year. And for most of you day traders out there, you are not typically achieving that. In fact, with all of the confluence and complexity in a lot of these smart money trading plans, you may average about 2 to 3 trades per week. When we are averaging 2 to 3 trades or pending orders per day, there is a massive difference. When you trade such a large watch list on the 4-hour time frame, you can actually get significantly more trades than many of you traders out there may get in a month. So hopefully that debunked that myth for some of you guys that if you are a swing trader, you will get far less trades than a day trader. And last but not least, we are going to talk about getting funded. This is the part of the video where most of you have probably clicked off by now, but if you made it to the end, like I said, this is probably the most important concept that people need to understand. All the time we get questions on YouTube, can you actually get funded with the simple markets trading strategy? Because people are unfamiliar with the 4-hour time frame. They don't understand swing trading. But the answer is a resounding yes. We have almost 70 funded members, which is over half of our community has sent a funding certificate in chat from using the simple market strategy. And every single day we are seeing payouts sent from new members, overall reward certificates, and more and more. Our traders are not only getting funded using the simple market strategy in a swing trading plan, but they are staying funded and achieving ridiculous amounts of payouts. There are many, many ways to avoid things like daily drawdown, overall drawdown, different strategies to approach firms to increase your odds of passing. A lot of people don't quite understand the mathematics behind firms and how to increase their odds of getting funded, which is one of the main things that we actually go over and teach our students here in Simple Markets is how to pass firms effectively using the swing trading strategy that we give them, then applying the different strategies to passing firms. We have the highest amount of funded members out of any community I have ever seen. So the proof is in the payouts here, guys. For those of you that made it all the way to the end of the video, pat yourself on the back. I know it was a little bit of a long one here, but I gave you 5 really solid points on why swing trading is something that you should keep in mind heading into 2026. I preach it so hard because I truly believe in it, and I see the success every single day of our students over and over and over. I could scroll for days in this chat here just showing payouts. I hope you guys learned something from this video. I hope some of you are keeping an open mind and may go ahead and try swing trading for yourself. If there are any questions about swing trading that I might have missed in this video or misconceptions that I didn't talk about, send a comment below and I will answer them right away. Thank you all for watching. I appreciate your time. Have a good week, and I will see you guys on next Monday.